Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea. How good was it today? Well, it was so good that we're taking one of our conversations today and we're slamming it in tomorrow to get to the jobs report on Friday. This is Wednesday. And we're going to slam Anna Wong of Bloomberg Economics into Thursday to set you up for the jobs report. I want to take a moment here and talk about a word I get, my kids, the dogs are giving me grief about when I say what the zeitgeist is. The zeitgeist is home is eat your dog food and stop sitting at the dining room table trying to get fancy pork from Leonard's. And the answer is the zeitgeist matters. And the zeitgeist in economics is always movable, always shifting. Anna Wong of Bloomberg Economics shifted the zeitgeist in the last 30 hours, maybe 48 hours, I'd say 30 hours, where she talks about revisions to the non-farm payrolls number, and you're going to see revisions that could be as high as 1 million jobs over the next year and a half. This is tangible. We'll save that conversation for tomorrow. Why do we do that? When you have the former vice chairman of the Fed, you move Anna Wong into Thursday. Richard Clarida is from Columbia. Arguably, he saved Columbia economics. Professor Clarida is at PIMCO holding court out in Newport. Tough job. But also as a former vice chairman of the Fed, he understands at the end of the day, forget about the dots. It's about a slowing U.S. economy.
My own sense is that we're heading down to around a 2% economy with a risk that we could overshoot in the other direction. I think it's too soon to tell, but some of the data, including the Bloomberg Surprise Index, it has moved into negative territory. We saw Atlanta Fed mark down from 4 to 1.8 in the last couple of weeks. Certainly when you're at the Fed, you are looking at everything. But I would say that if I had to prioritize, I'm focused more on the cost side of the economy right now, in the sense that everyone agrees that the labor market needs to adjust to be consistent with the inflation mandate. And I would say that the numbers there are encouraging. We've seen a big deceleration in wage inflation. That may create some political problems for the incumbent, but from the Fed's point of view, it's moving wage inflation in the direction of consistent with price stability, unlike, for example, what we're seeing in the Eurozone and the UK. So I think labor market and the cost side of the economy is what I'd be focused on. I think the demand side will take care of itself.
Richard Clarida, the former vice chairman of the Federal Reserve System, he is with PIMCO. There'll be a big Fed debate here. Of course, we're just now beginning our planning for Jackson Hole. Look for our coverage of Jackson Hole the end of August. That will be spirited and actually could be very timely. Dr. Wong of Bloomberg Economics makes clear the key revision report on non-farm payrolls will be 2 days before Jackson Hole. That, I'm not predicting it, but that could be a bombshell. Lizanne Sonders darkened the door today with Charles Schwab. With all of her experience, we learned, there's some important stuff we learned from Lizanne Sonders. She appreciates Taylor Swift, but is not a Taylor Swift fan. She's a rocker. We talked about Led Zeppelin, and we were Nickelback free to keep her in the studio. She would have stormed out if I'd mentioned Nickelback. But we also talked about the mathematics and the Newtonian physics envy of factor analysis. You have different factors, small sectors and small cap, and all sorts of different dynamics. And one of them is this word overused, momentum. And she and I agree there's a little too much mathiness and not enough behavior of what momentum is here. Lizanne Sonders of Charles Schwab on momentum.
In simple terms, it just means that stocks that have been working continue to work. But I think when people hear that word, they often have preconceived notions of what are momentum stocks, and it's often just tech and some of the high flyers. But as we've seen this year, the momentum is in areas like utilities. We wouldn't classically think of them as momentum stocks. We think of them as classically defensive stocks, right. But that just happens to be where the momentum is.
In the shortness of single best idea, we like to give you two great thoughts of the show, but we don't do enough on the data. And of course, what we've always done is to triangulate. You can triangulate within foreign exchange. Look at dollar yen, look at euro yen, look at euro dollar, just as one example. But you can also triangulate across asset classes. And I really want to emphasize right now that there's something profound going on. And in the blur of the Bloomberg Launchpad today, it was a print on the inflation-adjusted yield I happen to look at. There's 14 other flavors. But it's the 10-year real yield. And it printed 1.99%. It's not for me to say if we've broken support on certain select yields, but I would just suggest that it is exceptionally eventful into this Friday's jobs report. You see it as we record a lift to the NASDAQ, which is those big tech stocks looking at a lower rate environment. But it'd be fascinating to see. But overwhelming everything today was a 1.99 print on the inflation-adjusted 10-year yield. We are on Apple CarPlay for your commute nationwide. It's safer, it's better. On YouTube, search Bloomberg Podcasts. Subscribe to Bloomberg Podcasts. Building every day, Bloomberg Surveillance out on YouTube. On Apple Podcasts, this is Single Best Idea.